Balance sheet. It is very important statement which reveals the financial status of any company. That means at any particular year, for example, if you consider any year like 2015, 2016, at a particular year, whether that company is in loss or in profit, what is the financial status of that company, that we can tell based on the balance sheet, by seeing the balance sheet. So how balance sheet looks like? So balance sheet looks like, it contains liabilities on the left side. Okay, liabilities means like debts, and assets on the right side. Assets amount here, liabilities amount. This is the balance sheet format. Liabilities on the left side and assets on the right side. So let us see what type of assets comes under balance sheet, what type of liabilities comes here. Firstly, we will see assets. Assets are like three types of assets is there, like liquid assets and fixed assets and intangible assets. We will see one by one. Liquid assets are like cash. Whatever the cash we are having in hand, cash in hand, that is also liquid asset. So liquid assets are which is convertible easy into the cash, that is liquid assets. And fixed assets are like land, building, machineries. Those are fixed assets because we will purchase only one time, so this will be used for lifelong time. That's why these are fixed time. We will buy building one time, it will be used by lifetime, and land also like that only. And then next one is intangible assets. Intangible assets means which we can't touch, like goodwill, reputation, patents, copyrights. Those are all intangible. That means which we can't touch. Next, liabilities. Under liabilities we will mention capital amount we will mention, and also net profit and net loss also we will mention. That means in which previous year we will get the loss or profit. Sometimes we will get profit, sometimes we will get loss. So loss amount we will do minus, and net profit amount we will add. And then next, interest on capital also we will add. Next, drawings. That means whichever money is withdrawn for any use, so that is those drawings are will minus. And then next one, interest on drawings. For example, if we take loans, then on that loans, that interest will be deducted. Okay, we will see one by one what type of liabilities comes under this liabilities column. First one is, we will see sundry creditors. Sundry creditors, or that means credit means we will take money from others. So sundry creditors are from whom we purchased some goods on credit basis. For example, if you take some goods from A takes goods from B will give goods, but on A won't give the cash to B. On credit basis, that means like loan basis, he takes goods from B. So that is he should pay in future to B. That's why this comes under liabilities. And the next one is bills payable. Bills payable means like when I took amount from others, like loans only. That means in liabilities, under liabilities, these are types of loans on credit basis you take the amount. So bills payable means like loans. Outstanding expenses. Outstanding expenses means which you need to pay in future. That means for 2 months, for example, if you are in a rent house, you need to pay every month rent. You won't pay 2 months, then you should pay 2 months. I didn't pay rent, so I need to pay 2 months in future. So that is also outstanding expenses. Those type of expenses also we will minus. And then income received in advance. Advances also comes under liabilities only. That means next year rent not received this year. And then next one, loan on mortgage. That means if you have one building, then you get loan on the basis of building documents. You put the building documents and then for surety, then you will take the loan. That is called loan on mortgage. And then bank loan or OD, those are also comes under liabilities. And also reserves. That means surplus amount from last year. Reserves means whichever amount you had left, that means remaining amount which is from last year, that will be taken this year under liability. Why we can't use this reserves under assets? Because it is last year amount, last year remaining amount. If we take under assets, then we will expend. We will spend like easy money. That's why we will write it in liabilities. That means like it will be safety for the bank if we kept under liabilities. Otherwise, if you kept under assets, then we will spend easily. That's why we will put reserves in under liability. So this is the format for the balance sheet: liabilities and amount, assets amount. So this is the format. I hope you understand. Thank you.